Hey, welcome to the course. Nice to see you. Let's start right into it, right? So first, we will talk about microstructure. It's pretty important you grasp it up because this is the most important concept in order to understand price action. If you understand this concept in price action, everything else will end up pulling together, okay? So listen closely. If you do not understand the first time, no problem. Go ahead and watch it multiple times. So first, the market structure is going to be this way. Like this. An impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement. Okay? That's going to be our market structure. Of course, sometimes it's not gonna retrace all the way here. Sometimes it might retrace like this, okay? Sometimes it might do that. But overall, the point is not how long the retracement is. The point is seeing the structure, that is the impulse, to the retracement. And from the retracement, the next impulse. Okay, that's our structure. So let's go over a few examples and then we'll go to the next thing. Basically, we can see over here. Let's see. Impulse, boom. So this is our structure. Our structure is this. We go to the 0.50% of the retracement, which is very important. That's where we're gonna be entering later on the strategy. 0.50%. We see this, we like this, we continue lower, we take the low. This time we broke this structure because this was our high. However, we broke structure and we're in that type of ranging market over here. So no real view where we're going. Okay? Also, this will be our new structure. We will be looking for this to hold the 0.50%. So as you can see here, 0.50% goes a little bit but ends up not working and going lower. Right? Let's see a few more examples. Here we take this high, but we're still in a downtrending market. One point that you need to grasp up is not because we just have a breaking structure, it's gonna change and we're now gonna go all the way here like this and continue our trend. No. In further points, we're gonna be talking about liquidity. And that's a very important point to talk about when we're seeing structure. Because many times we will break structure to generate liquidity but end up going the opposite way because there's higher time frames such as the daily and the weekly, which will have bigger weight on the price action than an hourly chart. With that said, let's continue. We can see this is the structure, 0.50%. What does it do? Rejects, goes lower, but ends up going past through it and going through it. We usually want to see 0.50% react on the price. Now we have this structure. As you can see, 0.50 goes higher, fails, goes lower, then we have a big reaction, then we continue, and now which is our structure? This is our structure right here. Okay, so now we have this current structure. I think you by this point should have understood pretty much what structure is and how it looks. It's big impulses to where price stops and then retraces. Now let's talk about a change in structure. Change in structures will look like this. Okay, A change in structure will be we break the previous low of the bullish structure, then we retrace to a premium. We'll talk about that later on, but it's above the 50% and continue to break the lows. In a bullish structure, we break highs and make higher lows. That's how it works. And on a bearish structure, we break lows and make lower highs. That's how structure looks on both ways. Okay, now let's look for bearish structures. Okay, so here, structure of our big impulse, boom, break it with big impulse down, displacement. What do we do next? We go to the 0.50% right here, touch it, reject, go lower. What do we do next? We go over, pretty much almost taking the high, but eventually reject it. Again, what do we do? Same thing, almost took the high, but eventually went lower. Now, do we count this as our structure? Not really, because does this look very strong to you? No. Which would look this? So 0.50, reject, but end up going higher, lower. Now, here we have what? These very small impulses. Sometimes price action will look like this, but I'll probably wait on most of those and wait for a big impulse such as this. In this case, it didn't even retrace all the way here, and sometimes that will happen. Okay, but that's how a bearish structure would look. You want to see big impulses down, you want to see retracement, continuation lower, and this is how a change in structure would mostly look to you. Most of the times we will have a range, and then we go for the lows, we go higher, then we end up going for the lows again, and then we have the big impulse. That's when we have the big impulse after taking lows multiple times, which we will call liquidity. That's when we know it's most likely a change in structure, at least for the short term. Okay, not a change in a trend, but a change in a few days of structure, which we can take multiple trades in. Okay, this time it doesn't retrace all the way there, normal, like I mentioned. Which would be our structure? Well, it would be this. We retrace, go higher, again structure would be this. We didn't go all the way there, and we go higher, boom. And here we're just in a ranging market, no real displacements. Then we go lower, we go higher, range, like I mentioned, pretty hard to guess in these kind of low volume places. Most of the times I would recommend for you to wait for high volume structures, such as this, okay? I would recommend you to wait for those, because most of those times you can see as you develop your path that you can guess when a market is likely to reverse, such as in this case, or when it's likely to continue higher, such as in this case. Okay, but with that said, that was our structure class, and watch it multiple times if you didn't grasp it. Okay.